Hey everybody, happy Friday. Chris McNutt, your lender for all over Colorado. Of course, coming to you with my Friday market update. I felt like last week I was just bringing nothing but bad news, but this week it's nothing but good news. So let's talk about it. First, yesterday, the PPI report. The PPI report is the Producers Price Index. It's a inflation index that really tracks inflation at the wholesale level. So think of it as a really good leading indicator on where inflation is going. And that PPI index came out where inflation was just going up 0.1% year over year. That's basically flat. And that is really good news as it is a leading indicator of CPI, which is the Consumer Price Index. Now, that measure of inflation is the inflation gauge that the Federal Reserve loves to track and is basically what they're targeting to get to their 2% inflation rate. But that CPI came out on Wednesday where inflation was only up 0.2% month over month. So that is a dramatic improvement and very good news for the future of mortgage rates, because mortgage rates track inflation over the long run. Short run, there's some blips. In fact, we just ran into a blip last week, right? Where interest rates shot all the way up to 7.22. Well, this week, it's been a little bit better thanks to these inflation reports. We've actually seen interest rates drop about 0.3% this week. So we're back below 7%. And hopefully, fingers crossed, knocking on wood, that trend will continue. Now, I still expect the Federal Reserve to raise rates this month. Now, that is the Fed funds rate. That's prime rate. Hopefully, will not have a negative impact on mortgages at all. So they'll still raise rates likely this month, but then they're probably done. When you look at the market, the Fed futures market, you can figure out roughly what the Federal Reserve is likely to do in future meetings. And right now, there's an 80% chance that the Federal Reserve is done with all this interest rate raising nonsense that we've been dealing with. So now I want to talk a little bit about real estate prices. So most of the major indices now are all showing real estate prices at all-time highs. And that's certainly what I'm seeing in most of the neighborhoods that I'm helping people buy their homes in. And on top of that, we see CoreLogic, we see Black Knight, we see Zillow indicators, all showing housing appreciating now at more than 1% a month. So if you got yourself a mortgage and you had leverage, you could get a leverage return. So if you did 20% down, that 1% a month would actually turn into a 5% return on investment, not annually, per month. And if you're curious how that math works, well, click on the video in the description below, and I'll be glad to break down how a leveraged return on investment works for you. So that's the recap of the week. If you like the video, click like. If you have any questions about financing home, please give us a call. For sure, have an awesome weekend.